Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In this video, I'm going to share with you guys 5 different companies that you could potentially look into buying in the month of November, as well as of course adding some ETFs. So stay tuned until the end of the video to find out all of that. But before we get to that part of the video, I just want to quickly mention that it takes a lot of time and effort to put these videos together. It takes basically some of the subscriptions that we use. I do pay from my own pocket and so on. So it would be really wonderful if you can support the channel by, of course, joining a Patreon account where you get some of the things that I normally share. Things like, for example, all the buys and sales for the family portfolios and so on. I haven't done this month's update, so I'm currently working on that. So I will share that with the community very soon. Any monthly basically undervalued stocks that we normally suggest, so that's just suggestions. We're not saying go away and buy them. And there are other things as well you can get your hands on, inshallah. So if you could do that and support channel, that would be absolutely amazing. And like I said, I'm going to share with you guys 5 different companies that I feel like right now either fairly valued or undervalued. The difference between fairly valued and undervalued is one, of course, it is where it's meant to be, and the other one is below this intrinsic value, which is good, right? So the ones that are fairly valued, I normally wait maybe for a couple of weeks to see if I can get it on a margin of safety, maybe about 5% or so, and that's the major difference. So they are still trading and they're based on their intrinsic values, but they're not really overvalued. So I've got a couple of comments saying, you know, some of these stocks that you're talking about are fairly valued. Fairly valued, that means basically they are currently trading where they're meant to be. Undervalued is of course under, overvalued is over, right? So before we get to the 5 companies, I'm going to mention a couple of things, and that is just to talk about generally what's happening in the overall markets. Right now, the fear and greed index is actually showing us we are here now. I'm actually surprised we're not fear, because the last couple of weeks, the stocks have gone down quite a bit. So it'll be interesting to see by the time we get, you know, the election is coming up this week. So that will be a huge thing. Depending on what happens in that election, things can actually turn for the good or worse. We'll see what happens. So yeah, that's happening. Again, we don't really care about this too much. We just use it to kind of give us an idea of where the sentiment is, but we really don't really care much about that. The other thing that's happening this week, of course, it's the earnings reports are still going on. So there are quite a lot of companies that are reporting basically next week, but the ones I'm interested that will be reporting are Qualcomm is the first one, so they will be reporting on Wednesday after close, which will be interesting to see what they say. The other one that is also reporting, Hershey. Hopefully Hershey will actually have a good report this time. Even if they don't and it goes down, say it goes down 5-10%, whatever, I will be buying. I really like the company. Cocoa price has not come down quite a lot. So I will think, you would think their margins have been squeezed a little bit. So we'll see what happens with that. And there are other companies that are reporting. We'll see what Supermicro actually says as well. You've got Palantir and all other companies that are reporting. So we'll see what happens. But as always, we don't really care the date, basically quarterly, reports, because in the end of the day, if you're a long-term investor, you don't really care any of that, right? Because what you're doing is you're buying high-quality businesses when they're discounted, and of course hold them for a very, very long time. So we'll see what happens with the stock market. Before I go to and talk about these 5 companies, the first I want to talk about basically some ETFs. One of the things I've realized is that with the community, a lot of people actually do like the ETF side of things, and I really like that especially if you are new to basically investing in stock market. You don't want to do what I'm doing right now here, which is basically buying individual stocks, right? That's going to take basically a lot of your time and effort, especially if you don't know what you're doing. You could make a huge mistakes, and sometimes what happens is, I've got a friend who I've met recently, and we were just having a chat about stock markets and so on, and he's like, I'm not touching the stock market, I got burnt, I bought this and this and this. And when we went to the details of the things that he bought, number one, he didn't understand what he was buying, and number two, a lot of them were speculative, and it was something that was suggested by his friends and so on. So when you don't have the knowledge about these companies and so on, you're buying these high flying stocks, that anything can happen. So basically, in essence, what I'm saying is just buy high quality ETFs and leave them alone. If you're not sure about how to analyze basically individual stocks, buy the ETFs. Okay, you've got a basket of, so for example, if we look in this one here, for example, right, a year to date, every single ETF, as you can see here, these top three have done absolutely amazing. So if you own Invesco, for example, which is the one I own in my portfolio, you've got 17% return. The S&P 500, I think, is about 20% right now, which is absolutely amazing, right? Wahid has actually done about 13%, and the basic SP, the SPUS, for example, has done 22%. Which is absolutely amazing if you think about it, right? And the iShares have not done as much because I'm not sure what's going on with the iShares. I don't know if it's just the rebalancing that's not great, or if it's they don't have the big boys. Because remember, these three kind of mirror the S&P 500, if you like. They took out all the garbage and they left with those companies that are like top companies. And remember, when we talk about ETFs are basically treated as a one stock, and then the Sharia compliance side of things are applied to that basically one ETF rather than individual stocks. So you might have the Apples, Microsoft, and so on, and Googles and so on, but when you combine the entire business, should not be more than the haram part or the ones that is not allowed, okay, non-Sharia compliance side of things. Should not be more than 5%, blah blah blah, all of that stuff, right? So yeah, if you are interested in individual ETFs, and you're not interested in individual stocks, then have a look at this. Okay, these ETFs are doing really well. I'm not saying go away and buy them, but just have a look at it. And of course, some of them will be available in the US, some of them will be available in the UK and Europe and so on. So you just have to do your research, inshallah. I hope that helps. And like I've always said to you guys, if you don't understand what you're doing in the stock market, just buy ETFs, hold them for a long time, and inshallah, imagine you bought this one at the beginning of the year, you'll be up 17% right now. That's 17% more than you would have had if you left your money, okay, if you basically in a bank account. Simple as that. Okay, right, let's now get to the actual stocks that we're going to talk about. If you have not liked the video already, please do so. It makes huge help. Okay, it is really genuinely helps the channel. Okay, right, couple of things. I've made some changes. Okay, I was looking at this the other day and I just thought some of the information that I get comes from Seeking Alpha, which is basically this website that I use, okay, and I pay for. So I started using that rather than the free paid versions of other websites. So I'm gonna use more Seeking Alpha from now on, inshallah, to find my research, as well as of course my subscription for ASML for Morningstar. So these are the two main websites that I use where I get my information from. So I actually copy over quite a lot of that information, apart from the ones that I get automatically from Vinvis, which is basically another version that I use. So things like profit margins, return on equity, more or less is the same in every single website, and that comes from another website. Okay, so yeah, so I just made some change. So dividend is safety, for example, I'm using Seeking Alpha basically criteria, which is a C. So A plus is the highest you can get, and as you can imagine, C will be a safe if you think about it. Okay, and the other thing I made change to the EPS growth for the next year, that also now comes from here. So next year, so for example, ASML is the first company we're looking at. 2025 December, that's the bit that I'm looking at. If you look using the free version, you don't get access to this, so you can pause the video and have a look at it. I will share that with you guys. And this is what I mean paid subscription, because this actually costs me I don't know, over 200 pounds or dollars or whatever it is a year. So I'm actually paying for that. So yeah, so if you're interested, of course, to know where I got the information from, here, that it comes from here. So 2025, if you look at this one here, okay, EPS 26%, so it's 26.34, okay, that is this part there, okay. And then when it comes to revenue side of it, we're saying 15%. So 2025, 15.5%. That might just round it up to 16% if you like, okay. So that's where the information comes from. The rest of it also comes from Morningstar, which is another website that I use, okay. That 28% comes from there. Okay, right, that out of the way now, so you know exactly I'm not just making things up, okay, you know exactly where it comes from. Let's go through it. The first company, as you've seen, is ASML. Is down quite a lot for this year, for this basic last month and a half, because of the reports that they had recently. They reported and they sent it, basically they sent the report, it just come a day early, and it was a bit of a mess, okay. But overall, the company, nothing has changed. They're still making some of the best equipment, that basically the equipment that's needed to make these chips that everyone needs. Nvidia will not be Nvidia. and ASM, the things, companies like TSMCs and so on will not be doing what they're doing without the equipment this company makes. Okay, and as you can see, they have a wide economic moat. Current price is $674 per share, dividend yield of 1%, payout ratio just 10%, the 5-year growth rate 23%, dividend streak of 14 years. Okay, now that is slightly different to what's in here, so I'm gonna use from now on from here. I think there is a reason why. I just need to check. Okay, so this one comes from Simply Safe Dividend, but I'm going to use this from now on. So I'm going to check why that there is a 1 and there's a 14 years. I'll find out that later. But the most important thing is they do some pay dividends, and it seems very safe right now. The 5-year growth rate when it comes to revenue side of it and EPS, they're both doing really, really well. Profit margin, return equity, return invested capital, absolutely wonderful. Free cash flow of 3.2%, free cash flow yield of 1.1. Total return the last 10 years, we're looking at about 22%. That includes things like price appreciation as well as dividends paid. Estimates for next year, we've already seen that discounted right now 28%, $935 per share is where they think the price should be. The next company we're looking at today is ServiceNow. ServiceNow has reported recently, and of course I think the stock went up on the day. I can't remember exactly now. I wasn't paying too much attention, but as you can see, they don't pay any dividends. They have a market cap of $192 billion. They are by far one of the best companies out there, very similar to Salesforce when it comes to AI cloud side of things. They do actually have a lot of other products that they have that basically Salesforce does not have, and I think this is one of the companies that are kind of under the radar in a way anyway, because look at this is basically when it comes to the revenue side of things, when the EPS side of things, they're growing really, really fast. Profit margin, return on equity, return invested capital is doing really well. $3.3 billion of free cash flow yield of 1.7, total return last 10 years 30%, and they're expecting the earnings to grow about 19% and 20% revenue side of things, which is absolutely amazing. So yeah, so it's really interesting, the fact that the revenue is growing 20% next year and the EPS about 19%. Fairly value right now, 900 is what they expect. $943 per share is where it is at now. And looking at Seeking Alpha, as you can see here, we've got 25 strong buys and 9 buys, 5 holds, and 1 sell, 1 strong sell. And yeah, so the price right now, they're expecting the price to be $994 per share, 5% upside from where we are right now. So it'll be interesting to see what happens with the company, but it is fairly valued right now. It maybe if it comes down another 5-10%, maybe then it will give us that margin of safety that we normally look for. AMD is the next one. AMD reported, I think, recently. I can't remember. I have not been keeping up with a lot of them. I will be by the end of this week, inshallah. But 234 billion market cap, narrow economic moat, $141 per share right now. They don't have any dividends right now, but look at the revenue growth for the last 5 years, 32%. Look at EPS, 39% compound annual growth rate. Profit margin, return equity, return invested capital, it's not there yet. It's starting to. $1.3 billion free cash flow, 0.54% when it comes to free cash flow yield, and total return the last 10 years, we're looking at about 48%, which is absolutely huge. They're expecting the earnings to grow about 55% next year. EPS side of things, the revenue, they're expecting about 27%, fairly valued right now, $160 per share. That's the target for AMD. We're looking at about 30 strong buys, 7 buys and 10 holds here. We're looking at about 31% upside from where we are, $186, $187 almost. Next one that we're looking at today is Hershey company, is another company that I own in this portfolio. Down a lot, reporting next week will be interesting to see. So they might actually, despite the fact that they are now 15% discounted, we might even get a chance. Well, let's see what they report, inshallah. $35.9 billion of free cash of market cap right now. Price is $179 per share, dividend yield of 3%, over 3%, which is quite nice. This company has not been around this company used to be really expensive back in the days when the time in 2020 2021 I wanted to add to the portfolio, but it was always too expensive. But look at it right now. Payout ratio 57%, which is decent. The 5-year growth rate of 13%. 14 years of increasing that dividend, $5.48 is what you will get. Dividend safety, A minus, okay, which is absolutely fine. It's perfect. It's like the highest you can get. I think that will probably be equivalent of 95%. The 5-year revenue compounded annual growth rate for 7%. EPS declined, okay, for the last 5 years. Profit margin about 17%. Return on equity, we're looking about 48%. Return on invested capital of 26%. $1.3 billion of free cash flow. 3.75% when it comes to free cash flow yield. 8% total return the last 10 years. They're expecting the earnings to decline about 4%. And again, this depends on the price of cocoa and so on. If that bounces back, then that can easily change. And we've seen how things change very quickly sometimes. Revenue side of it, 3%. They're expecting to grow it for 3%, which is what I expect from this company. So about 3 to 7, 8%, these consumer staples kind of companies, okay? Discounted right now about 15%, $210 per share is where they think the price should be. Now looking at this, we only have 2 strong buys, 1 buy, 19 hold, 1 sell, and 3 strong sells. Now that tells me, basically when it comes to Wall Street, is basically they don't like it when it comes to seeking alpha analysts. I think everyone is kind of cautious when it comes to this company, but they're still expecting about 8-9% upside from where we are. $195 per share is the average from these guys. So it'll be interesting to see what happens. And I think the fact that they're reporting this week expectations. So if we look at the expectations, so this is what they're reporting this week. So again, look at that 15% basically revision, basically downward revision, rather than one person had the guts to say, yep, they're going to do better than whatever. So we'll see what happens. As you can see, they missed the last quarter. Will be interesting to see what happens moving forward. And final company we're going to talk about today is Qualcomm, another company that has basically reporting this week coming. 181 billion market cap, narrow economic mode. Dividend yield over 2% right now, 34% when it comes to payout ratio, 6% when it comes to the 5-year growth rate, 20 years of increase in it. So 5 more years, this company will become a dividend aristocrat. Annually, you'll get $3.40. A minus when it comes to dividend safety, 13% when it comes to the 5-year growth rate. For the revenue side of it, EPS is about 1%, profit margin 23%, return on equity and return on invested capital, all amazing. $12.5 billion of free cash flow right now, which is absolutely amazing. 6.5% when it comes to free cash flow yield, which is really good. Total return the last 10 years, we're looking at about 9%. EPS is we're looking at about 11% for next year, and then 9% basically for revenue side of things. So absolutely nothing to worry about when it comes to this side of things. Fairly value right now, $180 per share is where they think the price should be. Right now is $165. And looking at Seeking Alpha, as you can see here, we have 14 strong buys, 7 buys, 14 holds, and 1 strong sell. And about 27-28% upside from where we are. $211 per share is where they think the price should be. So it's interesting to see what happens basically when the company reports. As I've said already, they are reporting basically this week. So we will see. So you've got about 24 people basically that are basically revising slightly higher than what they initially said. So we will see what happens. I will let you know as soon as I hear from as soon as they report. That is the 5 companies that I want to share with you guys, and some of the ETF. Don't forget the ETFs as well. From Sharia compliance side of things, absolutely nothing to worry about. You can pause the video and have a look at that. But also, if you are really genuinely new, okay, look into these ETFs. If you go to the ETF section on my YouTube channel, okay, so there's a whole playlist there. You can get you basically stuck on that and just kind of understand some of the individual ones. And I will be looking at quite basically doing a bit of updates, because some of them have been done rebalancing on all sorts of things. If they've updated, so inshallah I will be updating that as soon as I get more time, inshallah. I hope you enjoyed this content. It takes a lot of time and effort, like I've always said to you guys. If you can join us a Patreon account and join the Discord. The Discord has a lot of brothers. I have not been contributing, I'll be honest with you. I have not contributed to it for a while now because I've been really busy. But there are a lot of brothers who are absolutely doing an amazing jobs. And then also there's a brother who's actually, a couple of brothers there who have their own YouTube channels. One of them has recently started, inshallah. I will share the link with you guys as well. He's doing a really great job and helping the community as well. So yeah, shout out to all of these brothers, mashallah, that are doing good jobs. Okay, the more we have out there, people genuinely that are, by the way, I mean people that genuinely care, people that genuinely want to help others, okay, not to make money or anything like that. I'm not making much from this thing. I'm being honest with you guys. All I'm doing is just trying to share my journey so I can help as many brothers and sisters out there, and I will continue doing that, inshallah. And as you know, the more we have, more brothers and sisters we have on this kind of things, doing basically this kind of Sharia compliance side of things, the better for us, inshallah, in the long run. Have a wonderful day. Assalamu Alaikum.